Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Wednesday, May the 9th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses. We do not know what the market's going to do, so we create multiples. We create two main hypotheses based on who takes control, the buyers or the sellers, and then we have two alternative hypotheses that are our expansion or trend type scenarios. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in the go-to and then do live trading and analysis during the course of the trading day with our members. So take a look at the economic news. We did have core PPI come out, and PPI month over month came out slightly less than expected, 0.1 versus 0.2. Building permits was a nice beat in Canada at 3.1 versus 2.0. 10 o'clock, we've got wholesale inventories. And then 10:30, we've got crude oil inventories. And then at 1 o'clock, we've got the 10-year note. And then we've got Bostic speaking from the Fed at 1:15. So not a lot of economic news. Of course, we are still deep in the heart of earnings. So just taking a quick look at the earnings. So this morning, let's just update this, see if so far, again, as we look at the big one being Groupon, which is was a beat. Most of the earnings are still very, very positive so far. Coming after the market close, we've got Roku, Novavax, Myomo. Not any really big names other than that. So nothing really to worry about on the close. Taking a look at yesterday in our trade plan. Yesterday, our main hypothesis was a open auction in range, a push up into the 72 and a quarter, and then somewhere between 72 and a quarter and 77, a rotation down towards some of the repair work that needed to be done down here in the 40s and 30s. Hypo 2 was an open auction in range, a move down and a takeout of the overnight low, and then find buyers and rotate us up towards that 77. That's basically what we've got, but the fifth alternative was an inside day and just chop, and it kind of just chopped around the prior day. Beautiful foobar Mr. Sneaky that showed up at the low of the day for a nice rotation up. Unfortunately, I didn't take it at the time, but it just goes to show you that this setup is still my favorite setup. So let's take a look at the macro. I always like to start my day with a simple candlestick chart. It's a very basic routine that I do, but it's very important. And I start with a monthly. I use a 9 EMA, 20 SMA. What I'm doing here is I want to make sure that I refresh my mind where we are in the time frame for the different periodicities, so I don't get biased too strong to one side or the other. Because as we show on the monthly, what I'm looking for is, do we have good slope and separation of the two moving averages? I use a 9 EMA, 20 SMA. Do we have price paralleling the 9 nicely? Are we coming down and challenging the trend by breaking below the 9? or are we violating the trend by breaking both the 9 and the 20? And you can see that we had 14 months of one time framing up. February, we violated the one time framing. We came down and we were challenging this 9 EMA, but we failed in the last 3 months to get below it and hold below it. So the overall trend is very much intact on the larger time frame. In fact, we could go down into the 2400s, the 2480 area before we even begin to violate this trend. And that's something important to keep your mind with not getting too biased to the short side. When we go to the weekly, okay, it does give us a bit of a complexity change. We did break below the 9 and the 20, but we are fighting this 9 and the 20 very, very strongly, and we failed to just blow below it and go down. All the buyers keep stepping in and buying that dip. So right now, there's no real trend on the weekly. Going to the daily, you can see that we were starting to get a stair step down, slope and separation to the downside, but we've taken it back. And here we are back above the 9 and the 20 and looking for the 9 as a possible cross above the 20 again and a possible continuation back up as this trend continues to the upside. Going to the intraday, the 4-hour, you can see that we are starting to trend up. We were losing some slope and separation, but they bounced back, and we overnight went and hit that very important level, that 84.50 I was talking about yesterday, which was our key line in the sand above. We went and tested it in the overnight, and so far have bounced off of it. 84.50 is going to be our month high as it stands right now. It's also our Globex high. So taking a look at the structure of the market, and just give me a minute to just add context to this. Okay, we started this long trend up on the gap up here, and we went up and we put in new all-time highs. We have a unequalized all-time high. What do I mean by that? That the Globex all-time high is 28.83 and a quarter, where the RTH all-time high is at 28.80 and a quarter. That is what I call an unequalized high. Statistical probability is that at some point in time in the RTH, we will go and equalize that high by going and testing the 28.83 and a quarter in the RTH. And one of the reasons why I'm not thinking that the trend is done to the upside yet. Then we tried to hold the all-time highs here at the 28.32, and then we gapped down again, and we came all the way down back to a former microcomposite VPOC down here, and then the buyers stepped in strong. They tried to break out several times and failed. And then since the gap back down into this value area is very large between the 27.16 area and the 25.87 area. And this value area low is very important because not only is it our current microcomposite value area low, it is also where this trend started. The microcomposite VPOC is just below it at the 86 level. So if we don't hold this level, then we can start thinking about a move down to challenge the trend on the monthly basis and down into those 2400s. But we keep dipping below and popping back up. And we've been just traversing this value area since this gap down on March 22nd. And our current microcomposite VPOC is here at the 69 and a quarter. We went up and we have accepted that 69 again. This area down here between between the 84 and a quarter and the 1875 is very, very much undetermined fair value. The VPOC, the microcomposite VPOC, has been jumping around from 69, then it went down to 57, then it went down to 47, and now it's back up again at the 69. We've accepted that price, and we've come up to the other side of that balance, up at the 84 and a quarter, and failed in the Globex so far. So key for us today is going to hold that 69 and bounce off of that 69, come up and break that 84 and a quarter. The other level you might want to pay attention to is the 77 75. That is the smaller time frame value area high that starts on this gap down day right here on the March the 22nd. And if we can stay above that in the Globex, we'll leave that gap open, and we could get a gap in. I'm sorry, in the RTH session, we could get a gap and go type scenario. So the key levels to watch on the bigger picture, of course, is going to be 84 and a quarter for a key line above, the 69 area for basically our over underline, and then below that a move down into the 60 area and a takeout of the VPOC from yesterday at 62.50. If we don't hold the VPOC, then I think we're going to see a bigger rotation down, and we could see a move down into the low from yesterday, which was down at 52, and maybe even a break below into that 47 area again. So let's take a look at the Globex. Inventory is roughly about 90% net long in time and value. Time and price. We've got a double distribution. They spent a lot of time here, and then when the European session opened up, they took it up. They challenged that 84 area. We do have a weak high at the 84.50. We basically got a triple top. They do have they did create a one tick failed auction here, just to be aware of. So I'm going to be watching this. Even though it's a weak high, this is a failed one tick auction when we broke through that MC LVN by one tick and then failed to put a double top, and then we moved back down into what is currently the microcomposite VPOC. There is an LVN right here that you're going to want to pay attention to at the 77 area. It's also right here at a former VPOC, and then below that, we get into the lower distribution where the HVN and where most of the volume went off in the Globex around that microcomposite VPOC at 69. It was where our Globex VPOC was until we moved up and shifted the VPOC and accepted price higher. We are moving down towards that 77. So if we start moving our levels over, our overnight low is down at 66.50. Our overnight high is up at 84.50. And our overnight VPOC just shifted down, not likely to shift again, but it could. It's at 26.80. Our 20-period daily ATR, or average true range 20-period full session, is running at 34.84. So off of the low overnight of 66, our daily ATR is all the way up here at 27.01 and a quarter. And off of the overnight high of 84.50, our downside daily ATR target is down at 49.75. Didn't move that yet, and that's just below the low from yesterday. And why I'm saying that if we don't hold that 69, we could see a bigger move down. So why are we looking at this? Well, it gives you an idea of what the average true range is right now and their capabilities. So we have capabilities without breaking above the average true range of going and testing the 2700 or getting back to the 49.75. Now we're going to be opening up outside of range and outside of value. this is a very valid value area, very good kurtosis. But the thing lately with these value areas is that they're very choppy, very spiky, or very blunt, which means that we're still in this price discovery phase, even though we're in this larger, this larger value area. We can't get, a fair price determined specifically. It's a range, and it's tough trading. Because you have to give yourself more room because we're still exploring price. So going to the hypothesis, my main hypothesis is going to be a open auction out of range, a move down into the 70 to 69 area, buyers stepping in and rotating us up through, testing the 81 area and the overnight VPOC, pushing up and taking the overnight high out and pushing up into this 91.75. And there's a VPOC up here, and I shifted my key line in the sand. It was 84.50 yesterday. I've shifted it up to 91.50, but the 84.50 becomes our over-under line. So hypo 1, open auction out of range, move down into testing the value area and closing the gap, and then rotating up into the 91, maybe a late day probe into the 2700, but closing somewhere up here in this 91 area again. Hypo 2 is a open auction out of range, a push up, take out the overnight high, but fail, and then rotate us back down into testing the range high from yesterday and near open, coming down and closing the gap and pushing through into the 62 area, and then basing there and basically closing somewhere in around the 69 area again. That is hypo 2. Because we're opening in a gap, we have gap and go rules. So we still have lots of time to go, but let's say we open up here around the 78.25. Our close was 70.50. So our half gap is going to be 74.25. That's approximate because I don't know where we're going to open. Let that move to the back. And again, I'll adjust this on the open. All right, so hypo 3 is going to be a gap and go, a open auction out of range, a move down, close the half gap, test the year open, test the range high, but fail to close the gap. Buyers take control early, push us up into the overnight high, and that 84.50, microcomposite LVN, and push up into the 2700 and push up into this former microcomposite 3-day VPOC up here in 2706.25, and basically close up in the 2700s. That is hypo 3. Hypo 4 is a take back day, failure to take out the overnight high, sellers take control, move down into the value area from yesterday, chop around this value area, come down, test the 59 and fail, and push down into the 48 to 46 area and go sideways and maybe come up and close around the 57. That is hypo 4. So those are my main hypotheses. There is a fifth hypothesis, and that would be basically a tight range and fighting the range high from yesterday and creating another doji day and going sideways between the 81.50 and 69.75 and just going sideways. That is my fifth alternative. Take a look at gold. Gold continues to base down here. We're creating microcomposite VPOC around the 1314 area. We broke that key level that we were talking about, a few last week, and broke that 1990, but we didn't clearly break the '04 level, and we keep bouncing off of it. So I'm waiting to see, how we handle the 19 or how we handle the '04. Those are basically our key areas. Other than that, I'm still expecting a lot more chop in this area as we base here and compress for the next move, either to the upside or back towards the composite VPOC down here at the 1290.80. This composite VPOC goes all the way back to 2008. Anyway, I'm expecting a choppy day in gold and not much action, but the two areas to keep an eye on if we break. It's very tough to trade gold when it's range bound like it is. It's much easier to trade gold when it goes back into price discovery, and those are where you get the really good trades and the good moves, is where we go into price discovery, and that's not going to happen right now until we get above the 20 or below the 4. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.